Well, good morning, everyone, and thank you very much for coming to the annual general meeting of Urbana Corporation. What we're going to do is what we've done at all of our annual meetings. We want to get through the business portion first, the administrative portion, and then I'll do a management update after that. We'll have a question period, and then we usually have one of the companies in which we have a significant investment give a presentation, and this year, for the second year running, we're having a Canadian Securities Exchange, Richard Carlton, their CEO, give a presentation and talk about the company. It's one of the stars of the show, so we like to put our best foot forward, and it's currently one of our best feet. Anyway, thanks for coming. So we'll do it in that business, management update, questions, presentation. And so we'll try to get rid of the business portion first, and then we can get to something substantive and talk about the world. So I'm called the meeting to order. I'm Tom Caldwell. I'm President and CEO of Urbana Corporation. Welcome. We have our current directors. I love when it says current directors, as if you're going someplace. Our directors for the afternoon. Beth Cawley, maybe you could just stand. George Elliott, Michael Gundy, Charlie Pennick, and our chief financial officer, Sylvia Stinson, back there as well. I'll preside over the meeting. Harry Liu, the Secretary of the Corporation, will act as Secretary of the meeting. And I shall ask Radha Malkan Singh and Laurie Grinton, representatives of AST Trust, the Registrar and Transfer Agent, to act as scrutineers. Notice calling this meeting and the accompanying management circular, the financial statements for the year ended December 31st, 2018, auditor's report has been duly mailed to all shareholders of the corporation entitled to receive notice, which includes holders of both common shares and non-voting A shares. Additional copies are available. Proxy forms were also sent out for those entitled to vote at the meeting. With the consent of the meeting, the reading of the notice of the meeting will be dispensed with. The Secretary of the meeting has filed with me proof of service of the notice of meeting, management information circular, proxy form, financial statement, auditor's report, and I'll direct the Secretary to annex notice and proof of service to the minutes of the meeting. Now, prior to the meeting, the scrutineer reported on the number of common shares present, the number of proxies received for the common shares, and I'll call upon the Secretary of the meeting to read the report.
The report states that there are a total of 50 common shareholders present in person or represented by proxy, holding 6.8 million common shares. This meets the quorum requirement for the purposes of this meeting.
Thank you very much. By the way, during the question period, we are taping the meeting, so it would be really helpful if you have a question to go to the microphone so we have it recorded. Otherwise, they won't be able to hear your question, and they'll just hear my long-winded answers. So I declare that notice being properly given in accordance with the Business Corporations Act of Ontario, the requisite quorum of shareholders are present. This meeting is properly constituted for the transaction of business. For the resolution that follows, only the holders of common shares are entitled to vote. The minutes of the shareholder meeting held on May the 9th, 2018 are available for inspection by shareholders. If there is no objection, I will entertain a motion to approve those minutes.
I move that the minutes of the shareholders' meeting held on May 9th, 2018 be approved.
May I have a seconder? Mr. Harry Liu. All in favor? Carried. The financial statements. The first item of business is to place before the meeting the financial statements of the corporation for the year ended December 31st, 2018. These financial statements, together with the report of the auditor dated March 6, 2019, have been duly mailed to all shareholders of the corporation. The report of the auditor, the shareholders, is open for inspection at the meeting. Are there any questions on the report or financial statements? Wonderful. It says here pause. I did my pause. Now, do we have a motion on the financial statements? We don't. We have a motion on those. The next item of business is the election of directors. I declare the meeting open for nomination for the election of directors for the ensuing year or until their successors are elected or appointed.
I nominate Thomas S. Caldwell, Beth Colley, George D. Elliott, Michael B.C. Gundy, and Charles A.V. Pennick individually and not as a slate for election as directors of the corporation.
Are there any further nominations? Okay, I declare the nominations closed. May I have a motion to elect those nominated as directors? I need a seconder. We have a nomination.
I move that each of the persons who've been nominated be elected director of the corporation for the ensuing year or until his or her successor is elected or appointed.
Thank you. Could I have a seconder, please? Harry Liu, Secretary of the Corporation. All in favor? Contrary? Carried. I declare those nominated have been elected as director of the corporation for the ensuing year or until his or her successor is elected or appointed. The next item of business is the appointment of the auditor for the current year. May I have a motion to appoint Deloitte LLP as auditor of Urbana Corporation?
I move that Deloitte LLP be hereby appointed auditor of the corporation to hold office until the close of the next annual meeting of shareholders or until its successor is appointed at such remuneration as may be fixed by the directors, and the directors are authorized to fix such remuneration.
Thank you. I need a seconder for the motion. Angela Sturpey. All in favor? Contrary? Was that Deloitte that voted against there? I didn't. The motion is carried. Any further business brought before this meeting? If there's no further business, I will entertain a motion to conclude this meeting.
I move the meeting be terminated.
Thank you. I need a seconder.
I second.
Michael Gundy, second. All in favor? Contrary? Carried. Goodbye. Anyway, it's always better to have annual meetings on the back of a really good year. But clearly, last year was not for this corporation. But we're going to have up years and we're going to have down years. And that's just the way it is. This was the first down year we'd had in, I think, 6 or 7 years. We've redeemed that to some degree. I think we're up about 10% for the first part of this year. The first quarter of last year, we were hit pretty heavily by some of our newly public IPOs, particularly the Bombay Stock Exchange and Real Matters. Both of them declined well over 50%, just shortly after, not long after they went public. And it was very difficult to do anything in Bombay because it's taken us almost a year to find out the mechanisms of how to sell in Bombay. It's been like World War III, and then you have to sell through Mauritius. And we did sell some stock, and it's been months now. We're trying to get our money back to Canada. So we didn't have the liquidity we wanted, even if we wanted to get out. Bombay went public at 1,100 rupees and immediately went to 500 and change rupees. So it's a little bit better, a little bit now. In the fourth quarter, we had some tremendous volatility, particularly that last month of the year, and it hit one of our key public components, which was the U.S. banks. And again, it was President Trump on about China, and as you know, we just started again this week. So if we could keep the president tweetless or speechless, it would probably be helpful to us in markets for at least a little while to have a degree of serenity. Pardon?
That would be great for the whole world.
Well, anyway, but but just before the decline in the market, I didn't like the feel of markets, and I tend to be very market-oriented, as opposed to a lot of the CIM, Caldwell Investment Management clients are more bottom-up, specific research. I tend to be strategic, sort of working my way down. Didn't like the feel of the market, so we did raise cash. We sold a lot of our U.S. banks where we have significant profits, and I matched them off with all the losses. Any losses I had in anything, I sold. So I tried to match off so I wouldn't have any tax gains to pay, to match gains and losses. And it's really interesting. I thought when the market declined in December, I was starting to think, gosh, I'm pretty smart, you know. That's not a, but you always should have sold more. No matter what you sold, you should have sold more. But the problem with raising cash in a down market, when it turns and swings on the upside, you tend to be a little bit lead-footed, and I was for January, because you just raise cash, you got to mentally change gears and dive back in again, and I just was not prepared to do that. And I think a lot of portfolio managers did miss that first move coming back up. But we don't have to cover ourselves with ashes and sackcloth. We did do a pretty credible job, and as I say, we're up 10% so far now. And if you look upon that, on the equity portion of our portfolio, that is the public thing, the performance is pretty good. It's more like 20, because a lot of it is what we have private equity. When I mentioned matching off gains and losses, I should mention too that we had tremendous losses over the years from mineral exploration activities in Urbana. And we've chewed through all of that over the years. I remember some years ago, actually Deloitte said we should not record your tax loss carryforwards as an asset because you'll never make it all. Well, we mercifully, thank God, made it all and plus. So now we tend to get taxed on capital gains, and the rate is 13.25% on realized gains. So that's something I have to pay attention to now. And that sort of altered my public, and I'm talking about the public markets here, my public market strategy a little bit, in that I've shifted a bit to dividend-paying Canadian companies. I brought some of that money back, that liquidity that I raised, paid off all the loans, and I've been buying high dividend-paying Canadian companies because dividends, things like Interpipe, which almost an 8% yield, that flows right through to the bottom line. That's untaxed in a public corporation. So on an interim strategy, I'm holding some Canadian reasonable dividend-paying companies, even some of the banks. I own Bank of Commerce, which has the highest yield, and that's usually because the Bank of Commerce has a reputation for walking into sharp objects, but hopefully, it's a good holding mechanism for the time being. We have more to do. Our overall strategy is still matching public and private components of our portfolio. Our liquid investments are for shorter-term performance and flexibility. If somebody wants to do a deal, they come to us because we have cash, not because of what we own. So we do have liquidity to do things. Private equity, typically for longer-term growth, and later for an income stream to some degree. I think the gurus of Warren Buffett and Prem Watsa will tell you cash flow is critical. So that's something that we're trying to build out to get more cash flow. And cash flow will cover a host of sins. If you make a mistake in the trading, cash flow can help you to accommodate that. And that's really the secret of Berkshire to some degree. Overall returns, we've maintained our overall level of about 14.25% since October 2002. And our goal is to continually try to match that long-term number. Now keep in mind, Urbana is not an ETF. It is an investment holding company where we have private equity and public equity. So, if you're going to compare Urbana's performance, say, to an all-equity ETF, you got to take the equity component and compare that to an ETF, not the overall, because at some point in time, the privates may do nothing for a period and be flat, and because they're longer-term investments, and that's why we need permanent capital. But when they move, they can have a significant shot up. So their performance in the private sector can be longer-term, and it can be lumpy. So it's not, if you're going to compare the public component to an ETF, if you will. One of the things I should mention now, so that's basically my report to shareholders. I want to reiterate and say to all of our shareholders, and I think Liz is in charge of public relations for Urbana Corporation, will attest to this fact. Any shareholder who calls me or emails me, I will respond to, hopefully the same day, always. So if you have a question or you have a concern, I know a lot of people go online and, have all kinds of misinformation which they share with people who enjoy misinformation or whatever. Call me or send me an email. I will get back to you. I mean, so many years ago, I knew Don Regan, who became White House Chief of Staff, and he was president of Merrill Lynch. And I remember he said to me, always go on fact, don't go on rumor. So if you want to hear the facts and want to know what we're trying to do, phone me, email me, I'll get back to you. I will open it for questions. If I don't have any questions, I have some questions here that if you don't ask, you probably should ask. But so I can do the questions and answers because I pick questions that I can easily answer. Yes, sir.
Hi, Tom. Thanks for the presentation. I have a question on the coattail provisions.
Right.
And are there, the stuff on your website is kind of dense, legalese, and I wondered if there were aspects of the coattail provisions that would prevent the conversion of the A shares into voting shares in the event of a bid.
If there's a bid for the company, and maybe council can help me here, what the coattail typically means, if it's above a certain level, I think 15%, yes. I'm beyond help, but that's absolutely.
The coattail provisions do have.
Microphone, please.
The coattail provisions do have a provision that if the controlling shareholders vote down or choose not to elect the offer, then nothing happens. But if the controlling shareholders accept the offer, then there is an automatic conversion. Is that helpful?
Yeah, that's
Great.
very helpful.
We can't sell at a premium and leave and I own both shares, obviously, but we can't leave the non-voting shareholders behind.
Yeah, no, my question was predicated on just a sense of amazement that the shares traded a 46% discount to their current breakup value. And I wondered, like, that's $100 million lying on Bay Street, and why somebody just wouldn't wander over and pick it up by making a bid for the company and, offering to split the proceeds of a liquidation 50-50, say, with the, all the shareholders, both voting and non-voting, and pocket the difference.
Well, it's easy to say liquidate, but it ain't easy, because what you do is you sell the liquid stuff and you got the non-liquid stuff, which might take you 2 to 5 years to get out of, and then you're going to have the stock at 50 cents or 30 cents. So it's not as easy a get. We're not going to liquidate Urbana, period. We are. I mean, clearly, the discount is something we look at. I'd like to see it narrowed, and there are many factors behind the discount. I mean, I can give you all kinds of reasons, some valid, some not. But if someone were to make a bid for the company, obviously we would look at it. But so far, no one's come out of the woodwork and said, listen, if someone walks up and says, I want to pay $10 for the stock, I'm going to Florida.
Mm-hmm. Yeah, I guess given my questions, I would make a pitch for some kind of liquidation of the company over the next few years. I think we've had a lengthy bull market. It's buoyant asset prices. There's always the risk of that 14%, returning to the mean in the years ahead.
It may well be the case, but again, I don't want to leave any confusion. We were not going to liquidate this company. Mm-hmm. We built a unique vehicle, and right now it's going through a very challenging period of time. But I remember many years ago, the stock was 80 cents, and the asset value was $120, $30. Tremendous pressure to liquidate, and I said, we're going to get, and the stock from there went up fourfold after that. It has pulled back for several unique reasons right now, and the discount has widened. Also remember, in valuations of private equity companies, you really do the best you can, but there is an element of subjectivity in the private equity companies, So you just is that value, ironclad, get it kind of thing. But there's things we're going to do to address it, and I will come back at it, but we're not going to liquidate the company.
You see, my thinking is that there would be benefits for the manager and the controlling shareholders to consider some kind of wind down and have incentive payments based on how much of that discount is realized. And
I think it's a unique vehicle that we have created, and it's done. And we have some incredible assets in there. For example, our urban township property. What do you do with that? It's on the books at zero. That thing could have significant value. So, I mean, if you want me to walk away with the Urbana property at $1, it is far more complex than what you're suggesting.
Mm-hmm. And I know you want to have a presentation from the Canadian Securities Exchange, but I'm wondering if you could just comment briefly on the radar and what its benefits are.
Radar really was a way of having Mark Leroll join us, and he's at the back, who we had done some work with in the past, to really do a scanning and investing in pre-IPO funding of companies. And that's what they're doing. We have rolled some LPs into a company now, and that company, Radar Corporation, Inc., and the plan is either to raise additional money in that company or to liquidate Radar, one or the other. So Mark is working on that at the present time. Mark, is there anything you would like to add about Radar yourself?
Yeah.
You can use the microphone if you would, please.
I think Tom did a great job summarizing it. Really, with Radar, we're spending the next few months taking a look at some options for making Radar a much bigger company, or the shareholders agreement was set out so that it acts like an LP fund, and people will get liquidity as they go forward, and then we'd potentially do something else with other fund structures instead of the corporate. So I think there's two great options for Radar, and the nice thing is both are a benefit to the shareholders like Urbana.
Okay,
And
thank
happy
you.
to chat.
Thank you, Mark. Yes, sir. Use the microphone.
I usually speak loudly enough without the mic, but let me just, I understand, for example, just now, why Radar is public and why that makes a lot of sense. It's not as clear to me what the benefits are of having Urbana as a public company. You know, normally, given this, and perhaps, you know, should it be privatized, for example? You know, should you take it, should you delist it? What was the objective in going public? And you know, I haven't been on board that long.
Well, keep in mind, Urbana was tantamount to a private company. It was defunct when Murray took it over. It had a small a set of claims, gold claims in urban townships, 6 claims. Caldwell Securities funded it, and what we did is we acquired about 74 claims, which are now 44 and reclassified. So we had to raise, it was a public company, it just was defunct, and then we raised money to do mineral exploration on that property, and we maintained it in good standing, and it's become one of the hot gold areas in North America, and actually, if not in the world. But it seemed to me we had a lot of losses in there, and the old mineral losses you could use for other stuff. That's when we converted it to an investment company. Then we raised money in Urbana to participate in securities exchanges as they demutualized. We made about $100 million in Urbana, and we bought back almost all that stock. We bought back almost that. In terms of share buybacks, we bought back 50% of the A shares and canceled them. And let me say, going forward, that's not off the table. I'm going to come to that. I'm going to talk to the normal course issuer bids in a minute. But it makes sense as a private company, a public company. At some juncture, you know, I'm still of the opinion, Urbana used to trade at a premium when we owned stuff that you could not buy yourself. When we owned the New York Stock Exchange, Chicago Board Option Exchange, I think the asset value was $3, and the stock price was $5. And because we own stuff you couldn't own, and that stuff had a story attached to it. So it's really about the sizzle to some degree. And we have to sort of look at companies that we're going to buy that's going to give us, you know, sort of reasonable paydays. At some point in time, maybe it's a goal, but if I can narrow that discount in over time, I now have a currency to take over other companies. I don't have that currency right now. So, I mean, I can't do it. I can't finance. If I finance, you guys would want to lynch me. I'd want to lynch me. So it's a goal to get that narrowed in at some point in time. It's not a killer goal that I got to do today, but it still makes sense because it's a unique vehicle. And I still believe that this mechanism is the best way to manage money. Listen, if you can buy $4 in assets or whatever for $2, do it, because the growth of those main assets are still growing. And so you're getting a degree of levered growth with it, in my opinion, at any rate. So I think it's obviously I'm biased. I think it's a screaming buy, but you know, I'm obviously going to say that because I'm management. What's happening right now in the stock, just to talk about the stock price, there is a seller in the market that's been hitting the stock for quite a period of time. You know, people say, why don't you do an NCIB, a normal course issuer bid? There's a timing matter to that. We are going to do that. We haven't done it in the last 2 rounds. I always keep an NCIB approval in hand. I'll always keep it in hand, whether we do it or not. 90% of NCIBs are not acted upon. We've acted upon them in size, and we will continue at some point in time in the future. But we want to watch size. We want to watch liquidity, cash that we have in the company. And we have commitments outstanding. So it will be dependent on that. But clearly, I anticipate recommencing as soon as at some point, should I say. I can't give you a date, doing the normal course issue, but it makes sense. It's that's not a, but at any rate, there has been this seller. I don't want to step up with an NCIB and say, okay, I'm going to buy 500,000 shares and there's 5 million coming at me. let them put it where they want it. Let them do what they want and get it into stronger hands. And that's what's going on right now in this process. It's getting into stronger hands. Clearly, we did not have the performance last year. The veil of invincibility was torn. But the other problem, too, is that small and mid-sized companies in Canada particularly do not have dealer sponsorship. Bank-controlled firms are not going to push Urbana or smaller companies like it. They just don't. They become orphans. And that means it is incumbent then upon management to do what they can. And that, again, speaks back to NCIB at some point in time. And clearly, CIM, Call Investment Management, is going through some issues right now, which we believe will be resolved, hopefully in the not-too-distant future by the summer. So these are negative influences on the stock. I believe they're temporal. And we will see. Time will tell us that. And anytime I get pressure to take the company private or wrap it up, that's usually the low. I mean, I've seen that so many times with this company. The normal course issuer bid, as I say, we always have approvals on hand. They're very complex now with corporations, extremely complex to buy. For example, if there's 1 million shares on the board and there's 3 sellers of 300,000 or thereabouts each, I can only take one of them. I can't buy all 3 because it's buying from 3 people. So absolutely, we went to the TSC, the OSC to get, and if I put a bid in for, say, 500,000 and I get it 2 sellers, I got to cancel one of the trades. It's absolutely insane, the rules. And we've talked and I can't get them to change it. So it is a little bit challenging. But there is a timing commitment. So we do have cash constraints. I want this liquidity and illiquidity balance that I want to keep in place, and we will come back, as I said, but when the timing is appropriate. But our buyback of shares is going to be accompanied against a backdrop of increasing assets. We're not, a couple $100 million may sound all right, but it's not big enough. We need to get it bigger, and the key is, as we grow our assets, I'm certainly open and amenable to, with board approval, to be buying stock back, but it'll be against the backdrop of increasing assets in the company. So that was one thing. Any other questions, by the way? Yes, sir.
Morning, Tom, again. Yes, I own a stock by the name of Hive. You have it in your account here.
Yeah.
Ran into the CEO, the president, and he told me it was down to himself and the secretary. I was just wondering how much you know about the company Hive.
We had it for a period of time. Dr. Thorne, I don't know if he's here. I guess he's not here. Oh, is he? Okay. He's the expert on Hive, but what happened is that when that market went volatile on us, I was down in the Hive, and I matched every loss against every gain I could in the banks to raise cash. And so it was really more of a strategic decision of why I sold Hive. But you and Dr. Thorne can have a chat about Hive later if you wish. We're flat the stock right now.
Okay, and I guess second question is, what does Real Matter do?
Real Matters is a really neat company. We're up about $6 or $7 million on that position. Real Matters took all the appraisal business in the United States, which really was mom-pop operations in every town, computerized it, put everybody on a system, and then signed up the banks as their clients. They've signed up every major bank in the United States. So when people are refinancing a house or buying a house and need an appraisal, they will go through the Real Matters system, and they get a piece of every appraisal in the States. The real earnings driver is refinancing of houses. If interest rates are low, people will refinance the house. So that generates income. The other part of their business that they just took over is title search and closing. They bought a business in that, and that's a good adjunct to the appraisal business they've got. That business is growing very well. It's done extremely well. But the stock went public, I think it was $13 or thereabouts, and then went to 15 and then straight down to 3. And that was what really was a killer. But now it's back to $6 and change right now. It's a well-run company. Really think of it in terms as a proxy for lower interest rates and housing in the United States.
The reason I asked, I believe I do have some stock in Real Matters, so I was just wondering what it does. Sometimes you forget. Thank you.
Sometimes I forget too, so I forget everything. Carl, you had a question over there, sorry.
Yeah, quick question on DOSC. I'd like you to have more detail. Is it keeping you out of focus on your long-term strategy of creating value for shareholder, because I'm in the business myself, and having a complaint or proceedings is not the most relaxing thing to have.
Oh, I've been sleeping well. I'm being facetious, Carl. Clearly, you know, when you're dealing with regulators, it is an emotional and mental time demand and financial time demand as well. So, you know, in every job you have all kinds of aspects. So you have to compartmentalize. Any other questions? A few other things. We had a suggestion from shareholders about putting little things about our private holdings in our website, which we've done that. So we do listen to shareholders, and we have a little pen there, profile of those companies. So you at least know what we're coming at. But if you have a question, phone me, email me. The thesis we have in this company of public, private, publicly traded corporation with public and private investments will work. It'll work, and it'll work well. You're going to have bumps. You're going to have demands of, oh, why don't you liquidate? There's a discount. I understand all that, and I can appreciate it. Listen, I'm not happy with the stock price. I mean, you may look in the thing. I own just under 5 million shares, so I've just dipped a little amount in my own net worth, which I'm not prepared to discuss with my wife. But so, you know, I know what it's like to get hit, and I'm not a happy camper about it either. So if that doesn't make you feel any better if someone else is down money, but I'm down money. And that kind of rips me, and that means strengthening resolve to get at it, type of thing. Now, if there's, again, I'll just leave with one minute. I'm always available to respond to your inquiries. And now, what I'd like to do is get on to the better part of this meeting. And Richard Carlton is the CEO of Canadian Securities Exchange, a wonderful business, a great team, and he's done a magnificent job of coalescing that team and really getting results. And we've had some good fortune along the way. So, Richard, would you like to come up and discuss CSC?
Good morning, everybody. Thank you. I think this is the third or fourth year in a row that I've had the privilege of speaking to the Urbana annual general meeting. Yeah. And every year I come up here and say, last year was a fantastic year. We're doing really well. And but I really didn't understand during those previous presentations how good things could actually get. So 2018 really was a good year at the Canadian Securities Exchange. And I'm not going to go through the slide of the results, but literally every measure that a public market looks at in determining its effectiveness and the success and the acceptance of its services by the investment banking and early stage company industry that we service, these are spectacular results. What we find most gratifying is that entrepreneurs used the Canadian Securities Exchange to raise more than $5 billion last year. And everybody assumes that it was the cannabis industry that was responsible for 95 or 100% of that money. And that's actually not accurate. We are obviously a bellwether for what investors are supporting in the markets. And cannabis was a big part of the story, obviously, in 2018. But we actually saw a significant rebound in financing for the mining industry. Close to $300 million was raised for the mining industry on the Canadian Securities Exchange in 2018. A lot of life sciences, financial technology firms also successfully raised significant amounts of money. 123 new companies joined the public markets last year on the Canadian Securities Exchange. And we had dozens of additional companies that completed either fundamental changes or reverse take or significant business changes to take advantage of different business opportunities that presented them. So we are the largest source of new public companies into the Canadian market. And obviously, one of the indications of how well the services are received is that we've also now become an important conduit for U.S. companies, principally in the cannabis space, of course, to access Canadian public capital. At this point, I believe we have about 60 companies with interests or investments or full-on operations in the United States that are listed on the CSE. Oh yeah, and we surpassed 500 listings in the first quarter of 2019. And I think I stood up here 3 or 4 years ago and said, for us, the magic number was 300. Because beyond 300, we were going to be not just cash flow positive, but we were actually going to start to earn money. And one of the things that isn't in the slides, because of course we're still a private corporation, are the financials of the organization. And one of the truly gratifying results of last year is that the balance of revenues, the costs and so on, actually look almost exactly the same as those for the TMX group, for NASDAQ, for the New York Stock Exchange, in terms of how the revenues are allocated across our market information business, our listings business, and our trading business. We're also generating profits and free cash flow at the same levels as those organizations. And if you know anything about the exchange business, you know that they're actual cash generating machines. So it was, in all measures, a successful year in 2018. Now there's a little bit about the cannabis story, but if I had to picture that picture of me was on the front page of the Report on Business in I think December of 2017. I'm not sure it's the one I would have picked, but my mother liked it, so it was an all-around success. Actually, a quick story. I was home in Peterborough for Christmas last year, and my sister had just been named as a member of the Order of Canada. And I had been on the front page of the ROB the week before, and my mother had a big Christmas open house. She has a new house in Peterborough, a lot of people that hadn't seen for 30, 40 years. And I was the celebrity, and meanwhile my sister, the Order of Canada recipient, was sort of a second thought. So it's obviously better to be in the Globe and Mail than to go to Rideau Hall. What are we up to now? Because obviously, we can't just rest on the existing trajectory. The wind will go out of the cannabis sales eventually. There may be something else that comes along, but we think that there are some really interesting things that we can do to continue to grow this business in very, very compelling ways. So one of the things that people who follow the organization know is that we recently moved. We had 6,000 square feet at 220 Bay, which is that funny little building on the northwest corner where Charlie actually has his offices. And he knows what I mean. The elevators don't work half the time and the HVAC breaks down and so on. But it's otherwise a lovely facility. It is on the path. But we were absolutely bulging at the seams. We literally had research analysts who do the background checks for folks that are looking to be officers, directors, or significant insiders of public companies, working in the boardrooms and the meeting rooms. One of their colleagues suggested that the stairwell was underrated as a workspace. So we looked at renovating the office space. It would have cost about $500,000 per additional workstation. So we decided to go back into the overheated downtown Toronto real estate market, and we lucked into some landmark space in First Canadian Place. It was already furnished, beautifully furnished by the previous tenant, Glencore Xstrata, who's downsized in Canada. And we have a lovely view, and we basically took it as is, which is why Brookfield was so kind to us on the rent and the terms and conditions of the lease. And in connection again with this beautiful space, we've already built a podcast room. We've got a center that we will be hosting listed company listing ceremonies, not just when they come in, but when we have company management, we'll bring them around. We'll do events that we can post to social media and so on. Apparently, everybody tells me television is so last year, whatever. It's all about getting on LinkedIn and Facebook and Instagram and Twitter and all of these places, and we're very big in those spots. They don't let me tweet, but I can tweet through somebody else. So I guess I have a live filter at all times. So that's good. better than Mr. Trump, I guess. In any event, it has been very successful so far. We've had a number of industry leaders and thought leaders into the organization, and in fact, the numbers have trended really well. In fact, we have our own YouTube channel. That's the other thing that we've done. And they dragged me in one day to do a sort of up close and personal, and they made me play the ukulele, which I can do. So if you want to check out me playing the ukulele, go to YouTube and look for our channel, and you can actually see that. But more importantly than that, we are embarked on a project to deliver a new clearing and settlement facility for Canada. Right now, all equity securities are cleared through CDS, the Canadian Depository for Securities, which is owned by our friendly neighborhood monopolist at the TMX Group. And they have used their ownership in CDS to threaten us with various bad things in the context of the U.S. cannabis industry. We looked at the time, what it would take to launch an alternative facility. It's obviously considerable effort, not necessarily from the technology perspective, but certainly from the regulatory perspective. Providing an alternative system that works the same way that CDS does would consume a tremendous amount of capital in particular. So we also began to look at other developments in the space, and it's abundantly clear, I think, to many of the industry leaders from around the world that the paper-based or even electronic book-based means that we have for managing who your shareholders are for public companies, for example, and transferring interests in these shareholdings. I mean, we know that there's still a lot of paper that's left in the system. In attics across Toronto, you have share certificates for the Bank of Toronto and the Dominion Bank of Canada, which are still valid indicia of ownership, but it's going to take a tremendous effort to actually turn those assets into electronic or digital assets. So what we're going to do, because it turned out that in our technology stack currently, will not cost us any additional license fees from a technology provider, was a token-based, blockchain-enabled clearing and settlement system. And so we are looking to launch this facility and, more importantly, provide a safe, regulated environment for people to trade digital securities. So we're not talking about trading Bitcoin or Ether or Litecoin, any of the cryptocurrencies, because there are enormous regulatory concerns and issues in that space. And again, over and above that, we're not actually regulated or permitted to provide markets in those assets. We can only trade securities. So assets that represent an interest in a security, we can trade. And what we intend to do is provide the full benefits of the new distributed ledger technology to attack the costs of clearing and settlement, which is hidden to everybody, except it is in fact coming out of your back pocket in terms of higher commissions for trading, the spreads that you pay in the market in order to purchase securities, and a number of other custody fees that companies pay. Companies also, and I don't mean to beat up on the transfer agents who are here today, but to process a dividend. Did you realize that the company pays the transfer agent, who pays CDS, who pays the dealer, who has to allocate the money to the individual beneficial shareholder? And everybody's taking a little slice along the way. So why do you think there aren't more dividend-paying companies in Canada? That's why. That's why. And it costs the dealers a lot of money to have smart people, because the money goes awry from time to time and they have to figure it out. And it's not something that a summer intern or relatively low-level employees in the back office can do. This is hard, and it's expensive, and it's risky. So we can eliminate that. We can change the process for shareholder communications, because the company would actually know who their beneficial shareholders are. Isn't that amazing? Proxy voting. Again, you can cut out 4 or 5 links of the chain and make it significantly more efficient. So but again, we're not doing this to make money from clearing and settlement because that's going to be a long, slow haul. We're also not doing it to lose a lot of money offering clearing and settlement services either. The return to the organization is that we will become the place where companies list digital securities in Canada. And we want this to be such a positive experience for them that if it comes down to a choice between using a very efficient and cost-effective digital security on our exchange or using an old-fashioned legacy 19th century technology piece of paper on another exchange, they'll come to the Canadian Securities Exchange for everything on a go-forward basis. So that's got us our focus, and the team's really excited. Where we are is the technology is currently in our external test environment, and we're conducting quality assurance work. And we will shortly be opening that up to the dealer community in Canada for them to do the testing that they need. The technology is going to work. The dealers are going to have to do make some investment to integrate the new information source into their back office processes. But I can tell you from going around and speaking to dealers from the largest dealers at the banks, to the independent dealer community, the dealers from overseas in the United States who are located here, the level of enthusiasm and support for this initiative is absolutely incredible. So it's not something where we're going to be butting our heads against a brick wall here. The industry's been waiting for somebody like us to come along with this initiative, and they are eager to roll up their shirt sleeves and start to work with us on it. And that's pretty much it. Again, like Tom, if you have any questions, I pride myself on spending way too much time, and I still have a BlackBerry. And I guess if you'd like to ask questions now, feel free and come up to the microphone.
Robert Grundlegger. If you annualize the first quarter, whilst it was really good compared to 2017, if you annualize the listings, it doesn't annualize out to where 2018 is. Are you more optimistic for the rest of the year, or was 2018 a fortuitous year?
We're on pace from a new listings perspective, Robert, to meet or exceed last year's listings numbers. Where things have been a little slower is on the size of the companies that have been joining the exchange. We have a cohort of large U.S. cannabis companies which are in the queue. Unfortunately, 3 of them got picked off by existing CSE issuers while they were on the doorstep. I've had harsh words with the CEOs for each of those 3 companies to have them at least wait until they've paid the application fee. Some sort of in jest. But no, we have another cohort on the way, and I expect those numbers to get back to comfortably in excess of last year's pace. Yes, sir.
Very impressed by the token idea. Just to understand it, does the corporation have to agree to do this, or is it shareholders? I mean, who decides that, if I have shares that are cleared by CDS, obviously, as all the Canadian ones, and some American ones, as you know, are, how do I get them onto your system?
So you're talking about the second stage of what we'll be working on. The first stage, it will be either new companies coming in that have cleared the digital security through a prospectus, or a company that's issuing a new class of securities to the public that will be digital. We don't want to bite off all of the problems the first go-round, because we've been talking to a number of the transfer agents who have ideas around how you take legacy securities that have been out there, convert them into digital assets. But it's still a considerable effort, and there are a lot of different ideas floating around about the best and most efficient way of accomplishing that. You can imagine some of the larger Canadian corporates, Bell Canada, Canadian Pacific, they've been issuing pieces of paper since the 1870s. It will be a monumental task to call in the paper and convert to a tokenized asset. Now, I will say the strong likelihood is that will happen, but it's not, that one probably won't be a digital security for 10 years, maybe.
Too bad, because of course, if you can accomplish that in a more simple and faster way, there's no reason why you can't trade anything, any security from anywhere in the world, and for sure, what's on the TMX, right?
Well,
Because-
as long as they're reporting issuers in Canada, then we're good to go.
Oh, they do have to be Canadians. Okay.
Correct.
My other question simply is, what's the threat? Is there anything happening with that relatively young upstart exchange that was working particularly hard with cannabis securities? Its initial starts with the same C. Any comments on that? I mean, are they surviving? If they are, should you buy them? These are all things you must have been thinking about, right?
I'm not sure I understood the question.
There's another stock exchange in Canada that was founded about half a dozen years ago or so. My old friend Ned Goodman and various other people supported, which, as you know, got listings, and particularly in the cannabis side. Is it called Canadian National Exchange or Canadian Stock
That's
Exchange
us, actually.
or whatever? Sorry?
That's us. Yeah, no, we're the Ned Goodman. We used to be the Canadian National Stock Exchange, or CNSX. But when Mr. Caldwell and Mr. Goodman helped and they led the recapitalization of the organization, concluded for a variety of reasons, not the least of which they had a hard time saying CNSX. I'm not joking. That a rebrand was in order, and we became the Canadian Securities Exchange.
Thank you.
And that exchange is doing really well. Thank you. Well, if there are no more questions, again, thank you very kindly. Oh, sorry. I thought I was going to get away lightly.
Okay, this is, okay, I understand probably the generalities of it, but I was wondering if you could get into how actual revenue is generated when, within the CSE, as terms of listing and just day-to-day and volume of trades, or if there are any other, or what are the avenues of revenue that are brought in? If you can go through those. Thanks.
As I said, in the exchange business, and particular cash equities, it's a three-legged stool. So that in effect, the start that kind of drives the bus is your listings revenue. So companies pay fees to apply to list, and then they pay to stay listed. So we have a flat fee that they pay on the way in, and then a monthly fee that they pay to us, which again, at the time being, is it's a flat monthly fee regardless of how big or how small that you are. And of course, as we grow, it's kind of recurring subscription type revenue, so it kind of builds on itself, and so that's a very healthy source of revenue growth for us. The second leg is the trading revenue. So we charge an execution fee so that every trade that takes place on the facilities of the exchange, and remember we trade securities that are traded on the TSX and the TSX Venture Exchange as well. So we make a very small slice of every transaction that occurs on the exchange. And then the third leg is the market information. And of the market information products that we provide, far and away the biggest supplier or producer of revenue is the real-time data feeds that we sell through companies like Thomson Reuters, or they call themselves Refinitiv now, Bloomberg, and other companies, to professional and retail users of that information. And as I say, a mature exchange, you'd like to see the three of them roughly in balance. I saw NASDAQ's financials market data, I think, is 28%, and the listings and trading revenues are a little bit beyond a third. And we're just about exactly the same as that at this point. So as I say, I'm very happy that it's not any one of the three that is driving the revenue by itself. It's a nicely balanced and as I say, kind of mature looking distribution of revenues for the organization. Okay, I'm going to get off. Thank you very much. Oh, sorry. Oh, one more.
They will let you go after this question, I guess. So I have two questions. So one, are you currently hosting this kind of like conferences, organizing those conferences for all these, like picking like maybe 50 of the company and then like getting like a 1 day or 2 day conferences? to the public, so each company can present. I mean, that's very helpful to promoting this trading of the securities. Would you consider like this kind of thing?
We find that our best investment for a company, and I almost hate to use the word promotion because that's a double-edged word in this market. But investor awareness, what have you, tends to be best spent with the investment dealers. And so we do a lot of work. In fact, we counted up in the last 2 years. We've done 150 events that we've either put on or attended as speakers and exhibitors. So but as I say, we tend not to do events that we run where companies are presenting to individual members of the public. We're not sure that that's a good return of our sales and marketing dollars. But there are a lot of events which do exactly that. So, for example, the Money Show, which is in a few weeks here in Toronto, is an opportunity for companies to engage directly with the retail investment population. So it's a case of we really don't have to do that because there are lots of opportunities for the companies to meet with, again, broader retail public. We tend to do more targeted things with the investment communities in Vancouver, Calgary, across the prairies, in Toronto, in Montreal, in the United States, and we've even this past January, we took a group of issuers to the World Economic Forum in Davos, and again, the main goal there was to provide a forum for them to meet with investors and principally from the European marketplace, and was highly successful.
Great, thank you. I have a second question. So, have you considered like to go public? If you can go public, like I mean, there's any like kind of limitation, like you cannot list on your own stock exchange, right, or something like that?
Of course we can.
You can?
Absolutely. We would never put ourselves through listing on the TMX group exchanges. It's an awful process. It's terrible.
So can you comment, like, I mean, whether you consider going public or?
Yeah, in the industry, this is known as either eating your own dog food or drinking your own whiskey. You can probably guess which I would prefer to do. But it is something that we're obviously looking at with our board and an investor community. We don't need the money. We actually have a very healthy retained earnings at this point. So any transaction to go public would be to either add liquidity for our early stage investors, which is always a good thing, but there are in some cases other ways of achieving that. And the other one is as acquisition currency for mergers and acquisitions activity. I'm deeply skeptical about the benefit of acquisitions in this space. I'm much more in favor of organic growth and reinvesting the money that we're generating in initiatives like the clearing and settlement component. But as I say, it's something that we're constantly looking at, and it may well happen. And as I say, the day that it does happen, it will be listed on the Canadian Securities Exchange and not on another exchange group in Canada. Thank you very much.
Two very minor things before closing. Your one question about the CNSX and whatever. I have to give you my artistic thing. You see you change the logo. You see the CSE. Richard and I were in Calgary, and I designed that, and I said that's our new logo, because what it is, the first part is being an entrepreneur. You got to bob and weave and try new ideas, but if you pull it off, you end up at the top of the establishment. And I wanted to name the Canadian Securities Exchange so it was simpler, and a byline, the Exchange for Entrepreneurs. And you'll get a great kick out of it. As you know, we own half or 49% of CSC. So I had my napkin, which we designed in Calgary, and we go to the board meeting, and I said, well, here's the thing. And I think somebody on the board said, well, let's show it to a design company and see what they can come up with. And I said, possibly you don't understand. this is the logo. And so there's my artistic one. But, you know, I would say I am so proud to be associated with Richard and the team at the CSE. It's a wonderful business. It's an optimistic business. It's an innovative business. And yeah, we've had some good fortune with cannabis, but just a great, great team. And you know, I sometimes think the cannabis industry in Canada would not exist if it weren't for the Canadian Securities Exchange, period. And you know what? The Canadian Securities Exchange probably wouldn't exist if it wasn't for Urbana. And that's the reason for having a corporation, publicly traded, where you have permanent capital, you can take a long view and bet on some really great people. And you know, we have a very significant profit in this position, and we think it's going to grow far beyond where we are now. So great team. And I think that's a testimony to what we're trying to do at Urbana. And sometimes we're going to do it well, and sometimes we're going to trip over ourselves. That's just the way life is. And we just have to try better for this year. And if we can keep Mr. Trump quiet, we might have a shot at it. Thank you very much for coming. Have a great day.